Okay, so welcome to recorded lecture all about taxable activities, taxable supplies, zero-rated goods and services, and exempted goods and services under the goods and services tax topic. When you say taxable activity, these are the activity that whether it's a result of a profit making or not a profit making activity, and these activities will be subject to GST or may not be subject to the GST. Okay, but for taxable activity, we will be focusing on GST taxability. So I'll present those activities wherein the applicability of GST will be presented or will be provided, or if the GST is exempted or the activity is exempted of GST, or that will be a zero-rated activity under GST. So the first activity is exported goods, that will be zero-rated. Sales of going concern or a business. Okay. Here it will be zero-rated if there will be two registered GST persons or GST registered persons, and a person will become registered immediately after the transfer. So in that case, the sale of going concern is a zero-rated. Duty-free goods, goods not in Papua New Guinea at the time of supply. Temporary imports, these are zero-rated, so no GST will be charged. Transport of passengers into and out of Papua New Guinea, that activity will be zero-rated. Certain export services and supplies to prescribed foreign aid providers, these are zero-rated activities. Now, when it comes to exempt activities, there will be exempt supplies such as supplies of financial services, supplies of medical services by medical doctors, hospitals, nurses, or dentists, the supply of fine material, not being the first supply. Later on, we will have a specific discussion on that. PMV and taxi fares, school fees, retail sales of newspapers, and postage stamps. So these are exempt. Now, it's not a zero-rated because when you say zero-rated, absolutely it is not considered for charging of GST. Here, these activities may be supplied by a GST registered company or entity, and if they supplied one of these, that particular exempt supply will be exempted. So for example, for bank, if the supply that will be pertaining to supply of financial service, so any charges which relates to that finance services will be exempt, but other activities of the bank will be with GST. Vehicles sold by GST registered dealer, that will have GST taxable input claimable only for commercial vehicles. So if someone purchased the vehicle and it is not for commercial vehicles, it is for private use, then the input cannot be claimed, or input tax credit cannot be claimed. Primary producers, only 1% GST for smallholders and farmers with turnovers of less than 100,000 kina, but otherwise it will be 10%. Non-profit bodies and charities, that will be zero-rated for local purchases and goods imported for organizations' charitable activity. Take note that importation is subject to GST, but if it is for charitable institution or charitable activity, then it will be zero-rated. But if the turnover on commercial purposes of these non-profit bodies and charities exceeds 100,000 kina, then they will be charged with GST. Now on donation, because it's common that there will be no commercial benefit for donor. Okay, so it is assumed that because it is donated and no commercial benefit, it doesn't have to pay GST, okay, even if the recipient is a GST registered one. But with commercial benefits, the donor recipient must pay GST if they are GST registered. That will be 1/11 or 1/11th of the amount received. Sponsorship, especially the commercial one, that is automatically subject to GST, and then they have to pay 1/11th of the value of the sponsorship. Second-hand goods, between two registered entities, the normal GST transaction will prevail. Now, if the GST registered entity is buying to a non-registered one, they can still claim GST, imputed GST of 1/11th of the amount. The value of the second-hand goods basically is based on the open market value. So because we don't know how much will be the exact price of the second-hand goods, we have to compare it in the open market. Lay-by sales, retailers will account for GST when the final payment is made. But if it is cancelled and then the vendor retains certain portion of the amount by the purchaser, then the amount retained by the purchaser will be subject to GST. Now, if you have a business asset which is used for private use, the percentage of private use cannot be claimed, or you cannot claim GST over that. So if the percentage is, let us say, 40% for personal use, so the 40% of the GST pertaining to that business asset cannot be claimed. Sale of business assets, that will be subject to GST, and then the value will be based on lower of cost or open market value. Now, if the assets are retained by the owner on cessation of the business, then of course that will be deemed to be sold, which is subject to GST. And the value of the asset will be based on an open market. Now, change of use from business to private use or exempt are subject to an adjustment based on the private use or private usage. Just the same way that I mentioned on top, it will be the same approach. Insurance policies are subject to GST. That's given. Now, companies making claim for compensation, they are required to return 1/11th of the insurance money received as assessable income. Insurance companies can claim 1/11th of any non-life insurance money paid out of the policy. Okay, should the insurance company recover any money from the paid out policy, then insurance company has to return 1/11th of the output tax. Now, if the lessor under the lease or rents, if the lessor is GST registered, of course it will be the transaction will be GST or it will be subject to GST. So the rents or the lease payments will be subject to GST. The lessor whose turnover exceeds 100,000 kina must register. If lesser, then the registration is basically optional. Employers providing employee accommodation cannot claim input credits because that will be classified as exempt supply. An individual paying GST on a privately used dwelling cannot register for GST to claim the GST back. Okay, let's go to the real estate. Sale of land is exempt of GST, but the improvements will be subject to GST based on the value at the time of valuation. Now, for the sale of property, if the GST person is not registered, okay, selling a privately owned house or commercial building, then they cannot charge GST. A vendor being a registered person but selling property used for his private purpose, obviously they cannot charge GST. A GST registered person purchasing a property from unregistered person cannot be charged GST on the purchase if the registered purchaser is going to use the property in a taxable activity. Then the purchaser may claim 1/11 of the purchase price as an input credit. So which means if you are a GST registered person and you're buying something from an unregistered one, you can claim GST if you will use the property in a taxable activity. Okay, just like what we did in the second-hand goods. So there will be imputed tax credit there. Or if you, as a registered person, you are not going to use the property for taxable activity, then it will be considered as a private purchase and it will not give rise to GST input credit. If the vendor, being a registered person, sells a property that is used for taxable activity or is not used as a taxable activity, but the property forms a part of registered person's business assets, then GST must be charged on that sale. So in other words, if you are a vendor or if you're a person registered or GST registered and then you're selling a property, then again you are not using it for taxable activities, you cannot claim GST. But if you're using it for taxable activity and that asset, even if it is not part or not using taxable activity, but it is included in the business assets and then you are selling it, you can charge GST. Now, housing scheme. An employee housing scheme is or similar housing home owning scheme provide all or part of the employee's housing finance may not claim an input credit. Real estate agents, lawyers, should be aware of the vendor's GST status. So you cannot assume that the GST will be applied on any sale of property without vendor's proof of the vendor's GST status. Now, hire purchase agreements. GST is payable as hire purchase payments, but you have to look into the following rules. Now, interest and other financial charges are exempt of GST because that is part of the supply of finance service. So you have to separate that one, and then the principal amount will be charged with GST, as you can see in the third bullet later on. On the second bullet, it says the supplier charges GST on the amount representing the principal cost of the asset purchase. So there should be a clear separation or distinction between how much the lessee is paying for principal amount and how much will be for interest, because again, interest charged especially on hire purchase agreement, that is GST exempt. So only the principal amount will be subject to GST. Leases are not hire purchase agreements, so GST is payable on the value of each lease payment, unlike in the hire purchase, because in hire purchase the amount that you're paying if you're buying under the hire purchase will be including interest. On the ordinary lease or leases, the actual payment doesn't have those interests, so the total amount will be subject to GST at the time of payment, of course. Now, metal refiner, metal ore imported for purposes of refining and re-export is a temporary import, so that will be GST free, or shall we say GST exempt. Not GST free, but GST exempt. Temporary imports may be entered free of GST on the importer giving a security or undertaking to custom for payment of GST should the supply not be re-exported. So it's protecting or avoiding those taxpayers who are trying to avoid to pay tax or to evade tax payment. So in that way, yes, temporary import, if it's classified as temporary import, we know that it will be exempt from GST. But then again, if they are not re-exporting it, okay, it means that it's like an ordinary import, not a temporary one. So that will be should not be GST free. Now, payment of toll fee to the mining company by metal refiner who do not purchase the ore or metal when refined is subject to GST. And that's it for my recorded lecture. Hope you learned something.